Good afternoon and welcome to the September 3rd, 24 Oversight Panel for Washoe County School District School Facilities. And we'll start off the meeting with a roll call, please.
Paul Anderson,
Here.
Clara Andriola,
I'm here.
Elise Bunkowski, Charlene Bybee,
Here.
Chris Cobb,
Here.
Andrew Diss,
Here.
Jean Herman, Justin Ivory,
Here.
Miguel Martinez, Devin Reese, Craig Wessner, we have a quorum.
All right, thank you very much. Move on to number 2, which is public comment. And do we have public comment today?
No.
All right. And with that, then we'll move on to 2.01, approval of minutes of the June 6, 2024 meeting of the Oversight Panel for School Facilities.
I move to approve the minutes as presented.
We have a motion by Member Bybee. Second? Okay. Member Binkowski's second. And with that, all those in favor say aye.
Aye.
All opposed?
Aye.
All right, motion passes unanimously. Thank you. And we'll move to 2.02, presentation, discussion, possible action to adopt pursuant Nevada Revised Statute 350.020, Section 4, the 2024 Washoe County Oversight Panel Resolution, a resolution concerning a proposal to issue general obligation bonds in one series or more, in an aggregate principal amount not to exceed 100 million, concerning action taken by the Oversight Panel for School Facilities and approving certain details in connection to the issuance of the general obligation bonds.
Thank you very much. Mark Mathers, Chief Financial Officer for the school district. For the record, thank you for meeting here today in this special meeting. I appreciate the accommodation. What you have before you, as noted by the chair here, is a resolution authorizing $100 million of new bonds for completion or to embark on our 5-year capital improvement program. So these are rollover bonds, and state law requires that for any new authorization of rollover bond debt, there's 3 entities that have to approve that rollover debt. There's the Board of Trustees, our Board of Trustees, there's the County Debt Management Commission, and then there's this Oversight Panel. So we've had approval by our Board of Trustees and the Debt Management Commission, and now we're coming to you for approval of this debt. So kind of stepping backwards again, our CIP that this Capital Funding Protection Committee approved earlier this spring actually includes a total of $675 million of new rollover bonds, $210 million of which are used to pay for projects over the first 2 years. This fiscal year 25, and then fiscal year 26. So a total of $210 million was shown in the 5-year capital improvement program. And this authorization basically executes on that plan in the CIP. We do have remaining authorization of roughly $68 million. We have actual remaining proceeds of $33 million. That $33 million in remaining proceeds plus the 68 in currently authorized bonds plus the $100 million that we're asking for your approval today gets us to that 210 figure, which is again the amount of rollover bond financing we had programmed in the first 2 years of the 5-year capital improvement program. I want to again express my appreciation to this board for the accommodation. Our financing team just couldn't whip around the documents fast enough for your last meeting. I'm a little nervous about the markets, to be honest, and having greater flexibility in order to execute on the sale of our bonds would be appreciated. We've got a lot going on, as I'm sure you see. The markets are a little jittery right now with recession talk and talk of the Fed lowering interest rates, which would be a good thing for us. You've got Ukraine and Israel, other global events, and then you've got a presidential election that are all playing into volatility in the capital markets. So by hopefully your authorization today for this $100 million of rollover bonds, we can be flexible on when we sell and get ahead of the markets and any, unfavorable news that may occur between now and the end of the calendar year. So I'm happy to answer any questions you might have about this action. And again, I know it's fairly rare. We don't do this very often, once every couple of years. But again, this is a required step, required by state statute, for this panel to authorize these bonds, which again is entirely consistent with the capital improvement program you approved previously.
All right, thank you, sir. Do we have any questions for Member Bybee?
Thank you, Mr. Chair. So, Mark, I do have a question. I want to make sure I'm clear on the $210 million in rollover bonds that you have total is for the 25 and 26 capital improvement plan that we've approved already?
Yes, ma'am.
So it's both those years combined?
Yes.
It's the 100 million plus what you have in the other two reserves or
Yeah,
two?
we've got some remaining monies from the last bond sale that we didn't use because of the deferral of our transportation yard project. And then we had 68 million of just remaining authorization from action taken 2 or 3 years ago by the Debt Management Commission and yourself and our Board of Trustees. Combined then, that equals $210 million.
Okay. And I guess with, can you clarify with WC1 the amount of revenue we've generated since WC1 was instituted, that goes to, like, I guess I didn't realize that we were doing, and bonds are a smart way to do business. We do them in the city, and I know, most jurisdictions do. So we don't have the cash that's coming in from WC1 to finance these capital projects that we've been looking at through this committee. The bonds are financing that. Or maybe clarify, I'm probably totally confused.
No, great question. Our CIP and our funding program is really comprised of two revenue sources. One is the 0.54% sales tax rate that we can use either for pay-as-you-go cash-funded projects, which we do when we can, or it's a pledged revenue for what we call our WC1 bonds. So the WC1 sales tax is one revenue source. It's bringing in roughly $65 million a year. Then the second revenue source we have is you'll see on your property tax bills that you all got in July. There's a school district debt rate of 38.85 cents per $100 assessed valuation. And that goes to pay for rollover bonds, which is what this request is all about. So these aren't WC1 bonds, these are rollover bonds that I'm talking about here today. Combine those two revenue sources, help fund, this very ambitious capital program that was approved as part of the CIP. Just to be clear, again, we try to avoid debt when we can. When we can cash fund facilities, we do. We typically cash fund design of projects. We've also cash funded a number of elementary schools. So we want to avoid interest when we can, but for larger facilities that are kind of entailed in the facility modernization program, we just don't have enough years to save up those monies to wait to do those projects. So we do bond finance, larger facilities, i.e. middle schools, high schools, or just large modernization projects. So this again, the authorization here today is for rollover bonds, not WC1 bonds. Rollover bonds are paid by the property tax on your property tax bill.
Okay, thank you for that clarification.
Any other questions? Yes, sir. Mr. Westner.
Mark, thanks. I'm new to this, so I just have a couple of questions so I understand.
Okay.
When you say rollover, Does that mean that you've paid off some debt, now you're reissuing that debt? Is that really what that means?
That makes sense, but technically, that's
It's
not
not.
why they're called rollover
Okay.
bonds in this state. They are called rollover bonds because the authorization to issue those property tax-supported bonds for school districts only is rolled over every 10 years. So they just become known as rollover bonds because you have to reauthorize, the state or voters have to reauthorize the issuance of property tax pledged general obligation bonds every 10 years, which they've done, and our current authorization lasts through 2035. But I like your explanation, actually makes
Well,
more sense.
that's why I asked. I
Yeah.
just wasn't really sure. That
Yeah.
made sense to me. Do we have like a cap of what the total amount of bonds that we can issue?
Yeah, in state law, there is a statutory mandatory cap. It's based on assessed valuation in the county. It's such a huge number. We've got basically $1.1 billion of total debt, and it would authorize us to go north of $2 billion, and we can't afford that. So that statutory cap isn't the most meaningful number ever. Really, our constraint is our revenues, as
Being able
you're
to
probably
pay it back.
familiar with. Yeah, so,
What's your realistic cap based on your revenue?
well, it depends year on year. So for WC1 bonds, informally, there's no rating agency cap on it, there's no statutory cap, there's not even a board policy cap, but we like to maintain 25% coverage, given the volatility of sales tax. So we've got to have a buffer of 25% more revenues than our total annual debt service.
Okay.
And so that number changes each year as sales tax revenues grow or don't grow. For our property tax-backed rollover bonds, since it's such a stable revenue source and because of abatement laws, 3% coverage factor is the minimum, somewhere between 3 and 5. We're well above that now. And sorry, I didn't bring a chart, but we have many, many rollover bonds issued 20, 30 years ago that are dropping off. They're maturing. So our rollover debt is actually declining over the next 3 to 5 years, which gives us, again, a lot of room to issue rollover bond debt, even if property taxes weren't growing, but they're growing strongly.
Yeah.
So it just changes year to year. And I can get you that information after the meeting if you'd like it.
Your explanation is satisfactory. Thank you. That's all I had.
All right, thank you. Virtually, do we have any folks out there that have any questions for Mark? All right. Oh, yes, Mr. Ivory.
Thank you, Mr. Chair. I just had a couple of just quick ones. I think these should be pretty easy. One is, how long does it take you to sell $100 million worth of bonds, roughly?
From start to finish or
Yeah.
or after the action today?
After the action today.
We can be ready to sell, so we've still got to meet with the rating agencies. We've got to issue an official statement, and we like some period of pre-marketing of those bonds to investors. We could be ready by the end of the month. Again, we'll kind of assess timing, based on what's happening in the markets and economic releases and so forth. So, again, we need a week or two for pre-marketing. The rating agencies need a week, and we need at least one more week to fine-tune the official statement, which is the prospectus for the bonds.
And how long does it take to actually sell them once you put them to the market? Usually, how long does that take? Is it overnight? Is it 6 months?
What we like to do again is have a week or two pre-marketing, so those banks or financial institutions, they're lining up investors. Most of them are pretty good at assessing our debt because we're regular issuers, and so we have outreach to them, but they are all, it's almost like eBay. They are all building, the markets are now such that they are all bidding electronically and competitively. There's not a negotiated sale, which we've done too. But these we'll publish them, we'll publish a sell date and a time, and then they'll all come in on that date. But again, we like a week or two to have our paper out there on the market so that they can line up the mutual fund shops they talk to, retail investors and so forth.
Okay, and I might have missed it, but what were we expecting as a rough interest rate on these?
It's really volatile, but we're hoping below 4%.
Okay. Okay, thank you, Mr. Chair.
So just had one question for you. You mentioned assessing the timing. Could you go into a little more detail? Because I realize it's more than just a roll of the dice. So who all is involved in that process, and how do you decide when to flip the switch?
Yeah, it's, we certainly look for the major economic releases that come out, and right now the market's focused so much on inflation and employment. So those would be market-moving events. We try to not sell on those days because the market can move 10, 20 basis points in a day easily. So we'll avoid those. We'll look at the calendar. We want to avoid any Fed meetings, of course. We'll also want to avoid any major press conferences or speeches by the Fed chairman, Jerome Powell, or even sometimes other Fed presidents. So just want to avoid anything that can move the market or stall the market as they wait for a statement by Chairman Powell. But again, as those numbers come out, that might dictate whether we move up or move back the sale date.
And who all's involved in the process?
Sorry, that would be primarily our municipal advisor, which is J&A Consulting, and they're a financial advisor to a majority of governments in Nevada. I think I shouldn't speak about other entities, but J&A Consulting we use, and then so they're consulting with me. Our bond counsel sometimes gets involved, but primarily it's a financial decision that firm and myself will kind of prognosticate and make a decision on.
All right, thank you very much.
Yeah.
Any other questions before we move to a vote? All right, looks like we're good. Do we have a motion?
I'll make a motion. I'm not sure what that motion is exactly, but I will move that we approve the rollover bonds for $100 million.
And on the legal side, I'm not sure, is that okay? Or do you need the motion actually read out?
Is there a proposed motion in here that I just didn't see?
I'm sorry, Mr. Chair, I was looking to see if our online folks were still part of the quorum. They look frozen, but I see Andrew's eyes moving now. I'm here. Okay, all right. What was the motion? I apologize.
I just moved to approve the rollover bonds in the amount of $100 million. Do we have one highlighted here?
I think that's fine.
I'll second.
I think it's fine. It's under its specific agenda.
Okay, so we have a motion made by Member Ivory, second by Andriola. And with that being said, all in favor, say aye.
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 All opposed? And the motion passes unanimously. Thank you very much. Thank you very much for the accommodation. Appreciate it. All right, we'll move on to 3.01, public comment. Do we have any public comment?
No.
All right, then this will be quick and simple. With that, we're going to adjourn.
Bye.
All right.